Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Monday, the 3rd of November, 2025. Time about 6:50 p.m. I want to thank one and all for the so many different people that have written me. I mean, it's massive on getting better. I've had major back surgery. I'm doing really well. I get tired fast. That's the only thing that's left. The doctor said that's normal. Your body's healing. I do my walks and what I can. But you can lay down for a nap and it's 2 hours later. It's the weirdest thing. And I'm not a sleeper. I'm a guy that's up always 3, 4 in the morning and working. It's different. But that's what it is. In the metals, gold getting hit, back down under the 4,000 level. Same thing happening to silver, no longer $52. You're back under 48. Even the copper, no 520s. We're back into the 504 level, platinum following suit. The dollar approaching the 100 level did hit it today. So for all the naysayers that were out there, the dollar's being debased and so on and so forth, my answer was, even under the medication I was on, and I'm not under that medication anymore. I'm down to the very mild stuff now. All currencies get debased until governments decide one way or the other across the board to stop cutting spending, to rein in that excess, and to get their economies back into economic order. All right? We're doing it to a degree by tariffs, but as you know, that's like an extra tax on everything. Where is the spending cutting going on? And don't get me wrong, I give President Trump, and I wouldn't want to argue with him, that he has gotten rid of excesses on payrolls. I do agree AI is getting rid of people in jobs that aren't needed, the lower end jobs. I don't know that it's creating them yet. I'm of the other opinion side of it. You may not agree with me, but it's where I'm at right now. I do think we're in an industrial type of revolution using artificial intelligence to get things done quicker and in better ways than we used to do them. And that's why the billions, trillions is actually the right word, is being spent on it, because it's going to change your life, your children's lives, and I can't imagine their grandchildren, your grandchildren. Energy markets, I was reading over the weekend how Russia was lobbying all the members of OPEC, don't you dare go and raise and do more production. We're in trouble via the Ukraine war, where there's all these tariffs on us. We don't want these prices going down. We saw that Russia and Saudi Arabia years ago, do you remember when oil went negative? And people don't believe me. You know, they think it didn't happen. It costs you nothing for the oil. You got to figure out how you could store it somewhere. They'd give it to you. And that was your big dilemma. Well, people, that's in everybody's mind. They don't need that problem happening again. So let's take a look and get a feel for the market. But before we do that, is there any real market information coming? I don't think so. You're getting the Red Book sales in the morning. They're now running under 6%. So you get slight slips under that. Used to be we were going 5 3/4 to 6.5. Now it's maybe 6, 6.5 to 5.5%. So we're slipping in those amount of sales. And there's reasons for that. The public is feeling they don't have the money. You can see it. The really rich, they're spending. I saw luxury goods sales are ramping up everywhere. There's two different tiers, the haves and the have-nots. The middle tier, they're holding their own. API numbers will come out tomorrow at 3:30 in the afternoon. And of course, you're getting your retail sales and all the other information that typically goes along with that. But when we look at the gold, we can see that the market's given up its best levels on a closing basis. It's up about 1/3% for the week so far. But when you get to look at a daily bar chart, the real picture comes in. You're up to 4,400. You've just pushed the 3,900 level. So now the market's come down into a big swoop here. And what's different this time around is finally the swing line is trying to go up. You're making a pattern of higher lows, higher highs. You are not over the 18-day average of closes, which is the 4,100 level. So you're getting bear market attempts at rallies. The market got overdone, short covering, bottom pickers coming in, but I don't see the new fresh buying going, oh, there's reasons you got to own gold right here. If anything, if it wanted to go into a washout and takes out the 2-week low that it had recently, you can make an argument for the just under the 3,900 level in the market, but you are oversold. So what do I think? Well, if you're a buyer of gold, you're early. If you're a trend follower, if you're a seller, you're late, you're oversold in the market, bye-bye gold. When we look at the gold-silver ratio, it's just sort of hanging here now at the 18-day average of closes. In the silver, the trend is down with lower highs, lower lows. It will take this little bitty amount to get silver to be friendly again. I would say a close getting back over the and we can get back here, I think. Yeah, it's going to let me do it. Let's get to the exact high if it lets me, and it will. There we go. If you can get over 48.99.5 on a closing basis, that would put you over the 18-day average, over the most recent high, and traders would say, you've got lower highs, higher lows, higher highs. The market's attempting a bottom, and it's now time not to be short anymore. This was the short covering rally. Now the question is, does the market continue down or not? Copper threw in the towel. It wasn't able to stand on its own, and by the middle of last week, you started caving in against the upper Bollinger Band, and you're back to the 18-day average. Nothing to do there. Platinum, these are one of these bear market rallies that I talk about. You get down to the Bollinger Bands, and you rally back up and fail against the 18-day average, what I call the line in the sand, and hurting all the metals has been this rally in the dollar, where I now think it's got problems. Now you're up to the 200-day average in the Bollinger Band. That's not to say it can't go higher. Should it? No. As a technician, this is now rarefied air. In other words, time for me to tell people, if you're long, pull money off the table, get yourself covered up pretty good, because at any point you can get back up and start backing down towards wherever that 18-day average comes in. I cover this and a heck of a lot more in my research reports. To get to them, you can either click up here or move your cursor anywhere up here. It'll take you to IraEpstein.com research. I'm putting out 2 a day. I have been putting those out this whole way through. My traders will tell you over the weekend, I even did my subscriber videos for them. I just am taking it easy on what I call my feeders, my free stuff that I put out there on YouTube, and getting myself well. I'm Ira. Again, from my heart, thanks all of you that wrote me. It means a lot to me. I'm here for you, and I'll catch up with you in the other videos first thing in the morning. Take care now.